I'll speak for 15 minutes and maintain the time discipline. Time is important, but these times are also crucial. They are crucial for economy, they are crucial for finance, they are crucial for technology. When this invitation came, I agreed because of two reasons. One was, invitation was from Trescon, a known entity. It was expected to be a well-organized program. And I also want to see that I speak to experts. And I treat you as experts, and it will not be a usual talk of projecting an institution, a country, or a profession. My focus will be on what they say in policy sciences, meta-policy. Meta-policy means you take a total view of the political economy, which comprises of three subjects, three disciplines. You talk of finance, you talk of law, and you also talk on the rule of law, which is political science domain. Having said this, my second structure of thought will be on knowledge and human interests. Friends, the topmost philosopher today in the world is Jürgen Habermas. He is a 93-year-old person, and an important seminal work he wrote was on this topic: human knowledge and human interests. Why am I referring to a philosopher in a gathering of technocrats? Because of this core insight of his that human interests get hampered because the harmony between the knowledge and the outcome, social outcomes, is often not there. So he identifies that human interests globally, historically, are on three things. And when I speak the next sentence, you will immediately correlate with the markets. First type of interest, which is identified in philosophy, is called technical interest. Technique is a French word. It means the method of doing things, performing, competing, and ultimately researching. That is the technical interest. And those who today, in 21st century, are technocrats means they are like saints. They work hard and ultimately come out with the solutions. Then there is the second interest, which is called profit. The understanding of economics which I have acquired tells me that profit is good. Logically, prudentially, profit has to be earned. What happens wrongly is that while selling the product which is out of technology, we do not care for the corporate responsibility. So profit is good, profiteering, this craze for profits and profits and profits is a problem. And when I say this, you will immediately recognize that blockchain technology, which is the essence of today's fourth industrial revolution, has two dimensions. When the first thing came up in 2008, a paper came, anonymous, pseudonymous paper came, and in that there was a talk. It was a 12-page document, we all know by now, which had promised libertarian ideas. It was not only an idea that things will be happen exponentially faster, proper, safer, but it also contained within it the wisdom of liberties. But what happened in researches since 2008 till 2014, that the whole thing went in for the cryptocurrency, within inverted commas, dynamics. And researchers, wrongly or rightly, because of the motive of profiteering, shifted towards that. But in 2015, it was realized that the same blockchain technology can be used for better contract management and several other issues which we all know very well, I need not tell you. So second interest, knowledge interest, is of profit, which is good, but not profiteering, which is the third. Third interest is the emancipatory interest. Here by this we mean that technology which we use is used for better inclusion, better consumer behavior, and ultimately excellent outcomes in managing things for humanity. My focus is on the future of banking in the age of digital disruptions. First leg of my argument will be on markets. We all have heard about the fiscal crisis, global financial crisis 2008. We also have heard another crisis before that, which was 1929. These things are known. And it shows that markets behave in a disruptive manner themselves. It's not only technology which is this way, market. So better understanding of the financial situation, markets have to be taken. Friends, I want to highlight very quickly that since 2008, the economic theory also has changed. We have now a better understanding of markets. In economic theory, there are two debates which had come up earlier. One debate was between Keynes and Hayek. Hayek's argument was that market is a spontaneous activity and there's no need to even touch it. Politics should be out. Politics is an irrational behavior, coercive behavior, and the world, he thought, forcefully thought, he got Nobel Prize, is better without restraints. So we had, friends, internationally, what was called the global Washington consensus. That consensus said that regulation shouldn't be there, and even if it is there, it should be a feather touch regulation. Reply of Keynes on that was what we learned through Stiglitz, Joseph Stiglitz today, that no, regulation is required. There are market failures, for that matter, even there are state failures, and so a compromise really is needed, and ultimately a better industrial relations have to come up. Solution to all this post-2008, when liberal philosophy got exposed, there was a massive human destruction in terms of employment and output, came evidence-based approach to things. And post-2008 studies in economic sphere have told us that we have to take issue-based, sector-based, evidence-based understanding of the whole thing. And regulation also has to be done in a coherent way, and that's what the understanding has been. If you do understand that, we must understand also in the context of 4.0 Industrial Revolution. Attend the World Economic Forum. This idea was proposed by them. And now They have been working on it since time memorial. Next to markets, this is the second part of my argument, is a conceptualization of disruptive innovations. Friends, we use words disruptive innovations very frequently. But there's a common sense meaning, disruption, like an earthquake, tectonic shift. But there's also a deeper management studies perspective, which has arrived from the understanding of Joseph Schumpeter, an economist of a very, there are four economists which matter: Adam Smith, Keynes, Marx, and Schumpeter. Schumpeter was the first to think of technology as a liberating force. But he wrote very little. After Schumpeter, in the year 1994, came a Harvard Business School professor. He died, unfortunately, of cancer year before last. Clayton M. Christensen. I have given his name because you must, if you want to understand disruptive innovation, must see the three seminal books he wrote. And the last one he wrote, it was in 2011, where he talked how companies who are great financially do not do well because they take a view of technology which is deterministic. What is the deterministic approach? In sociological science, it has been told that disruptive behavior has to be understood in terms of theories. But Clayton Christensen and the economic thinking I just highlighted, post-2008 has highlighted that you have to observe the companies. And while we all observe, while working, attending meetings and drawing strategies all around the world, Christensen was great because he summarized the whole thing in a very beautiful way. He has 5 principles. And those principles are based on a team study from Harvard with proper methodology till 2010, that was post-2008, and he came out with the conclusions which are still relevant. So Clayton M. Christensen, his works, particularly 3 works, should be of importance to you and should form, you must go through it. If you go internationally, globally, it is presumed to have been read. And then if you can comment on that, it will be an addition. You need not agree with everybody, but if the wheel had been invented, there's no point of reinventing the wheel as well. So I thought in this gathering, I highlight these works. And he gave, next point, 5 characteristics of organizations who have the innovative diagnosis. And innovation, as you all know by experience, is not only a managerial aspect, it's a board level aspect. And these things are highlighted, time is limited. Another guy who you all have heard his name is Peter Drucker. While he wrote several books, he was called the father of management and all that, for us, the most important writing of his was called Technology at the Workplace. Ultimately, we work. And while we work, it's not only good to be only agile, etc., the philosophies which are generally propagated, which is understood, it's common sense, it's very important to respect the entities who work together. I quickly come to the policy view, and then I'll go to institutions, and then I'll end. All right, this background is given. You may ask, all right, you have told certain authors and names and certain things have been spoken about. What shall we do? As Lenin used to say in a seminar paper earlier, V.I. Lenin, a communist, he said, what next? For that, ultimately, there are several views, and I have been expressing them since year 2012, when the first FinTech conference UN organized in uh, Indonesia, Bali conference it was, and where on security and several dimensions of emerging FinTech at that time, a global consensus was arrived at. Now, today, as I see, there are 5 issues which I have highlighted. I need not read out because time is limited and your uptake is very high, which concerns us. Now, problem here is cross-disciplinary understanding. I'll take an example and rush through it basically. When we talk of cybersecurity and fraud risk, we all have some knowledge. We have contributed to it. Problem is the FATF problem, Financial Action Task Force. I was Enforcement Director India and I represented negotiations. We must go through the paper which FATF authorities last year presented to G20. It's available on net. Any enlightenment further will depend on our capacity to have absorbed the last year's document of FATF on Financial Action Task Force on the well-being of the humanity. As experts do well, persons on the dark web are also showing results. Crime and deviance has acquired high proportions. And instead of time you will never have in life because you are an aspiring person going up, like all of us here, therefore, crucial document I would like to mention is FATF document to G20 submitted last year on the current concerns, and it has also given you solutions. It has given you solutions with regard to the digital currency, which is I have been speaking on it all elsewhere, and on the proper uses of blockchain in the interest of humanity, along with the layers of security problems which we had. Another friend's line, which is generally not spoken in seminars, is the contribution of standardizing authorities. Particularly, 2 I would like to mention here, which you all may have heard about it, but ultimately not given so much thought on the group dynamics of the best experts in the world. One is the platform. You know, India's payments vision of RBI has come out. So up to 2025, goals have been set. But these documents help you only to get a structural view, not really a functional view. And functional views are taken in the international bodies, like bodies which regulate transitions on inaction. After 2008 financial crisis also, a major revolution, 3 major revolutions have taken place. One, of course, financial crisis. Second is blockchain revolution. Third, which is not neglected and highlighted, and I would like to highlight it today, is the work of standardizing accounts, standardizing business procedures, standardizing new technology in a positive way. This area is a very fertile area, and that has to be taken. On data governance, I need not tell you, you know already. Important thing is that India is coming up now with a data law. Privacy is a fundamental right here, but rights are there. You realize more than me how these concerns have to be balanced when a product ultimately is wrong. RBI recently has expressed its concern on the codes of conduct in outsourcing financial services, particularly within payment systems. There's a beautiful paper on it. I have no time to deliver, but a specific analysis I can take. Another, friends, finally, which I would like to say as a total meta-policy view, will be on entrepreneurial sustainability setbacks. We all know that startups is a phenomena. We sing praises, but we also realize both sides, how things are not happening. Government failure here becomes very important. If there's a whole entrepreneurial theory in microeconomics which says that nations ultimately are built on entrepreneurs. And recently, modification is on the startups. Startups can be all types, not just big entities. They are trying to come within the structures of finance all over the world. In UK, the best practices have come up, and the legislations and regulation of UK are even better than the European Union standards. So Harvard people are very clever. Immediately they picked up the trend, and there are excellent books written on startups, particularly on the sustainability of setbacks. Setback is going to come. It's a competition. But how to see that the damages are minimized, the learning lessons. Now, recent management studies of startups have come up to that level which we should do. Time is limited. I had told you that I will stick to the time. I've said how institutional foundations are important. I will take up the last part particularly. Contract law foundations are very important in the growth of technologies based on the fourth industrial revolution. What I have in my mind is the regulation of blockchain. People have been struggling in Stanford and everywhere on what the contracts should be when blockchain advantage is taken. Now, coding is fine. Developments in insurance industry can be understood, but those who code and those who know the legal content of it, there's a disharmony. Time is very limited. My whole PhD is in law, so I would like to say this much, that as a technology person, we'll benefit quite a lot if the insights of the contract law which the Stanford University has developed with some professors can be taken up. In India also, there's a whole issue of digital currency. And digital currency, unless it is properly codified and properly analyzed and the details are given, a lot of work is going on within G20 countries and India. But again, these things are not revealed. They will be revealed to you when things come. But the good thing for India is not only the adoption of technology, fintech particularly, by the people, by the companies, by everybody, but also a fact that government has finally indicated in the budget sheet of the finance minister this year two things. One, on digital assets, virtual assets particularly, taxing it. It was a policy choice, and we have gone by the global morality and the promise of the digital currency. Remember, 1 week after that, even the Fed of US indicated along the similar lines. And the US takes up the currency matter, India will definitely better. Things are better. G20 countries are working very well. I have spoken recently on the fourth industrial revolution leadership, and that talk I have already given. Friends, it was an opportunity to talk to you, and I am grateful about it. I have tried to be objective, and I have tried to give you whatever a senior citizen can give to you. Thank you.